Hi everyone and welcome to Moneycurious. So today we're going to talk about what the impact has been of COVID-19 on the stock market and the economy in general. So obviously we're now in the midst of this COVID-19 pandemic, and it's been an awful and crazy time for the world right now as a whole. So before we dig into this topic, I just wanted to wish everyone well. I hope that any viewers of this video are coping well during this time and that you and your family are staying healthy and well. I know a lot of people are not used to not seeing certain family members, certain friends, and you might be in a quite confined space staying at home. So I just hope that everyone is staying well during this time, both physically and mentally. So in this video, we're going to take a look at what effects the COVID-19 pandemic has had on the stock market. And I'm assuming if you've come across this video that you're interested in basically putting your savings to use, investing in something, which puts you in a pretty good situation actually in the COVID-19 pandemic. So we should think ourselves definitely as the lucky ones. So we're in quite a unique situation right now because not only have we stumbled across a dip in the market, and a recession only tends to happen every 10 years or so, but this is taking effect worldwide. And not only that, it's quite odd to have businesses literally told that they're unable to continue business for weeks to months at a time. So this is obviously going to have a detrimental effect on the economy as a whole. So businesses that are particularly impacted are things such as airlines, restaurants, gyms and theatres. So moving on to this first graph, I thought this was quite a good thing to show because basically what we're looking at here is a graph from the Institute of Fiscal Studies, and it's showing the percentage change in share prices of firms in different sectors listed on the London Stock Exchange relative to the Footsie AllShare index, dated from the 2nd of January to the 23rd of March 2020. So for any of you that don't know, or haven't heard of the Footsie before, the Footsie 100 is basically a basket of 100 companies that are listed on the London Stock Exchange, and it kind of gives you a bit of an indication to how well the UK is doing in terms of the economy, roughly, because it's basically 100 of the best companies. So the Footsie AllShare index is basically the same thing. It's a basket of companies, but it's more than that. It's more than 100 companies. So it's quite a good indicator to measure these sectors against that, because you can see which sectors are doing above and beyond the sort of average of the top companies in the UK and which are not doing so well. So if we look at the top of the graph here, we've got, unsurprisingly, food and drug retailers, personal goods, which are things like your toiletries, your cleaning products and things like that, medicines, biotech research and gas and water are all up about 20% versus the Footsie AllShare index. And that's not really surprising because I'm sure, as you've seen in the media and on social media, obviously everyone is going to need food, but a lot of people have been buying personal goods and drugs and things. Toilet roll seems to be a major one for some reason. And then obviously medicine and biotech research. People are frantically looking for a treatment for people that have COVID-19. They're also looking for a vaccine, if possible. And just in general, like, there's probably quite a few shifts that are happening within medicine research anyway, and like looking towards like telehealth, being that we have to have virtual consultations and things like that. And of course everyone's always going to need gas and water, just maintaining the general running of their home. So those are the top ones, but if we look down the further end, so we've got fossil fuels and distribution, that's been largely hit. That's coming up to like the minus 30% region. Obviously we know that no one is flying anywhere, or at least there's quite big limitations on this. So many people have had to cancel holidays and things like that. So it's having a big effect on the tourism and leisure industry. We've also got automotive and parts there that's been quite affected. I'm assuming, people aren't really going to be looking to upgrade their car and things like that. They're not travelling as much. They're not necessarily travelling into work anymore, and maybe just being a bit more conservative with their funds. If we move on now to this graph, I just thought that this was quite a good depiction of the key events that have happened and how they kind of affected the market in different sectors. So early on, we've got the first human to human transmission confirmed, the first case in the UK, and at this point we've got a little bit of divergence that links up nicely with that graph I've shown you previously. So we've obviously around the 30th of January, where the first UK case is mentioned here, we've got the fossil fuels producers, they're down. This is versus the Footsie AllShare index again, whereas you've got personal goods and gas and water is up. And you've got to remember, around this time, people weren't really taking this that seriously, even towards when we go towards the Italian lockdown there. In the UK, we were starting to get a bit worried, like everyone was washing their hands and being a bit more careful, but we weren't anywhere near the lockdown at that point. So basically everything's going around the midpoint until you get into that Italian lockdown, and then it wasn't until you get quite a big divergence that the UK started its social distancing. So, but at that point, when we're looking at about the 19th of March at that point, you see that food and drug retailers, personal goods, what else have we got? Medicine and biotech research, and gas and water, they're doing drastically better. And then you've got nothing around the midpoint now, and then you've got your tourism and leisure, fossil fuels and distribution, automotive and other fossil fuel producers, all really not doing so well down there. So that's when around that point, sort of mid to end of March, is when we start to see how the different sectors are coping with what's going on in the pandemic. We went into lockdown sort of end of March. So I've had a look at what was being said around the 31st of March relating to the pandemic, and The Guardian said the Footsie 100 suffers the worst quarter since 1987 as the COVID-19 recession looms. So at that point we saw a 24.8% drop in the Footsie 100, and that's meant to be the second worst quarter since 1987, which was deemed Black Monday. So that's a pretty severe outcome. I also looked up how long it took for the markets to recover from that Black Monday. So that happened in around, I believe, October of 1987, and it took until 1989 for the stocks to begin to recover. So this is a graph taken from The Guardian on the same date. So if we look at the bottom one, probably best to have a look at, you can see on the left around the 1987 mark that you've got that big drop. And then when you look across to 2020, it's almost matched by that 24.8% fall. So moving on, really not many days ahead, but things with this coronavirus, happen very quickly. So 7th of April, what's being reported is quite different to the 31st of March. So UK shares surged, and they were led by mainly travel stocks, insurers, house builders. So it was reported that investors welcomed signs of slowing increases in coronavirus-related deaths in the worst affected parts of Western Europe, and that's what caused this surge. So, and then the FTSE closed up 3.1%. So it's kind of looking like things have started to recover. Certainly, in the US, I know that they've put like $1 trillion $1 trillion or something into the market, and that's helped it recover to a certain extent. But I mean, there's definitely mixed reviews on whether that's going to sustain or whether it will go back down again. So the next question is, so which businesses will not survive the COVID-19 pandemic? And you kind of have to think along the lines of what is relevant in current society, what are people going to be using? And we've already gone over a few of those things and seen like clear diversions in the sectors that are doing well and sectors that aren't. You know, things like the internet, and people are going to continue to use their mobile phones and perhaps buy data, and they're going to continue to buy groceries, personal goods, so your toothpaste, your toilet roll, cough mixture, shaving cream. And you've also got to think about what is a luxury versus necessity, because, you know, people are going to lose their jobs. They're probably not going to buy things that are considered luxuries. But, you know, it might not always be crystal clear what isn't actually a necessity or a luxury, because, for example, things that do well in recessions, despite people not having jobs or not having much money, alcohol does well, tobacco does well, video gaming does well. But I think it's because, you know, psychologically these are things that are crutches, aren't they? You know, if you're stuck at home, I'm pretty sure you must have seen on social media the amount of people that are drinking quite a lot at the moment because they're stuck indoors. Equally, if you've lost your job and you're a bit of a video gamer, then you're going to be upping that, I think. So you kind of have to think about the current situation and what people are getting drawn towards in when we're going to make a decision about whether we would look at a certain business or not. Take a look at this article. So this is a list of British and Irish institutions that might not survive the coronavirus. And I think really these are quite clear examples. Some of these you might not even been aware that they still existed. So Laura Ashley is the first one on here. So they provide, it says, best known for dresses and sofas in 80s floral fabrics. Now, that sounds very niche, first of all, but not niche in a good way. I mean, how big is their market segment? And it says the chain was already in serious trouble before COVID-19 hit, and now it's gone into administration. So, yeah, things like that. Like a lot of retailers that don't have a big online presence, when you talk to, you know, if you talk to women that buy items of clothing online, they're kind of going towards your ASOS, I guess like New Look, or anything that has like a really easy website to use online. Carphone Warehouse, with this one, you've got quite a dated name already, which is, it says here, is like a surprise that it even lasted into 2020. So Carphone Warehouse announced that it's shutting all 531 of its shops permanently in April. And then it's keeping concessions inside PC World and Curry's open. That whole sort of physical presence of Carphone Warehouse is gone. Thornton's, another one, is kind of a luxury good, isn't it? Like, people do like chocolate as much as they like alcohol or tobacco, but Thornton's is kind of positioned as a high-end kind of brand. So Primark, they've made some fatal errors, really, because they were feeling the effects of the COVID-19 pandemic early on, because they get a lot of their supply cheap from China. So they were already having some issues there, because China obviously was the first place to feel the effects of the pandemic. And not only that, they failed to actually have any website where you can buy their goods from, which is a pretty big error. So I can't really see Primark lasting anymore. Debenhams had been going down the pan for ages, in my view. I mean, I recall about 6 months ago walking into one of their shops. They're often absolutely huge stores, and there was barely any stock left. Everything was on sale. Nothing was really that appealing in the way it was presented. And you can see here it says it's closed a load of stores, tried to negotiate a 5-month rent holiday, and now it's closed its stores because of coronavirus. Here's some more HMV and game. I mean, a lot of these things, obviously I did say earlier, video gaming is going to be popular, but you don't have to get it from game. Game and HMV are kind of old-fashioned in that you think of like going into the store for that experience, whereas you can buy a lot of these things that are sold in these stores anywhere online now. Arcadia Group. This covers stores like you got Burton, Dorothy Perkins, Evans, Miss Selfridge, Topman, Topshop, Wallace. These are kind of like clothing brands which I don't think people are really that bothered about. You can buy a lot of stuff online now. So I think they're going to struggle. It says here they had a bad Christmas and even more closures. Carpetright, I mean, I can't see many people deciding to do massive home renovations during this time, especially if people are struggling financially. One that we might not have thought of, because here we've got Paddy Power, Betfair. I think online gambling probably has gone up because you've got people bored in their houses just playing things on apps like poker and betting games. But they're also going to not do so well from this on the other side of it, because a lot of people were betting on sporting events, so like your football, the races and all sorts of things like that. So they're not doing so well because of that, because all of these events have been cancelled. Obviously, Weatherspoons, no one's going out to the pub anymore, so they're going to struggle. So future predictions, and here we've got some quite depressing quotes. So one from Forbes here said, US GDP is collapsing as we enter what is expected to be the worst economic contraction since the Great Depression. Oh my God. Economists say that it would be anywhere between 2021 to 2031 before the economy returns to something like the pre-coronavirus normal. And of course, I've listed there that the US has injected 2.3 trillion back into the economy, and that has really had a very minimal effect on increasing stock price. In other places, you see that they kind of think like once lockdown is over, everyone's going to go back to normal. My point of view is using common sense. Even if we were in the best situation, which would be we could confirm that people who had coronavirus were now immune to it, and we could test for that, then all those people could go back out and do their jobs and get out back into society. If we were able to repurpose a current drug that we have so that people are more likely to survive from the coronavirus, and then thirdly, if we're able to find a vaccine so that we can prevent people from getting it in the first place, if all that was to happen fairly quickly, even then I can't really see society just jumping back to normal. As soon as we're allowed out of lockdown, I think people are still going to be fairly tentative to kind of integrate with other people, get close to them. Obviously, we've seen a few idiots that have been gallivanting out and about and doing things they shouldn't. But I think the majority of people have kind of got into this mindset where they're like washing their hands a lot. They are abiding by the rules. And I can't see people just running out and going, yeah, I'm going to go to the cinema, I'm going to go to the theatre, I'm going to go and sit in a packed restaurant as soon as the lockdown is over. I think it's going to be a very gradual thing for like several months, I would say. So the way I see it is, yes, the market's dipped massively. They've kind of recovered a bit now. But I can't imagine they're going to continue to recover. I think it would be fairly unlikely. The effects of this pandemic are still ongoing. People are still dying at quite alarming rates, and it's still definitely not under wraps at all. Even in China, that have recently come out of lockdown, I would imagine there's going to be the odd resurgence of cases there as well, and they're probably being the most careful out of any country. So I would say that we're definitely waiting for another dip in the market, but as most people say, it's best to just invest a regular amount every month in the stock market. So I hope you found this video interesting and useful. We've kind of focused on what not to go by and like overall what's happened to the sectors so far. In a later video, I'll get into perhaps what we can look to invest in and some stocks that I found that I think are particularly promising.